Ladies and gentlemen, thank you for joining us today for Autoneum's half-year earnings call 2026. I'm happy to share a strong set of results for the first half of the year. Let me start with three key messages. The first half of 2026 confirmed that discipline execution matters, especially in a subdued market environment. While global vehicle production declined, Autoneum improved its financial performance, strengthened cash generation, further enhanced earnings, and raised its full-year guidance for both EBIT margin and free cash flow. These results demonstrate our ability to consistently translate operational improvements into stronger business performance, while continuing to execute our strategic priorities. Before we go into detail, let me briefly walk you through today's agenda. I will start with the key performance highlights of the first half of 2026. After that, our CFO Bernhard Wiehl will present the financial results in more detail. I will then come back to provide an update on our market outlook and our guidance for the full year. As usual, we will conclude the call with a Q&A session. Please also note that this conference call may not be recorded for publication or broadcast. Let me start with the highlights of the first half of 2026. Autoneum performed well in a weaker automotive market. Global light vehicle production declined by 1 percentage point in the first half of 2026, while Autoneum achieved a 3% total growth in local currencies, of which organic revenue was 0.1%. This means that we outperformed the global market. In the first half of 2026, Autoneum delivered a strong financial and operational performance. By executing our strategic priorities with discipline, we increased our EBIT margin to 6%, generated free cash flow of 58.6 million Swiss francs, reduced net debt, and further strengthened our balance sheet. Across the regions, Europe, North America, and SAMEA delivered strong contributions to profitability. At the same time, Asia showed solid top-line momentum, while profitability was temporarily affected by integration efforts, new plant launches, and continued price pressure. We also advanced our innovation leadership in electric mobility and made tangible progress on operational sustainability, including, for example, energy efficiency initiatives that generate annual savings of more than 19,000 megawatt-hours. China remains the most competitive and fast-moving automotive market in the world. The market continues to be shaped by high volatility, intense price pressure, accelerating consolidation, and the growing influence of local OEMs. At the same time, these developments create opportunities for suppliers with the right skill, customer access, and operational footprint. In this environment, Autoneum continues to strengthen its position in China. While the market contracted in the first half of the year, our revenue in local currencies increased by more than 14%, driven by the contributions from our recent acquisitions of Jiangsu Huanyu Group and Chengdu Yiqi Siwan Group. These acquisitions have significantly expanded our footprint, customer access, and local capabilities in China, and strengthen our position as the number 2 player in our market in China. We are progressing per our plan with the integration of our recent acquisitions and realizing first synergies. This strengthens our growth platform in the world's largest automotive market, together with the recently announced 2 new plants in Wuhu and Anqing, and continued business wins, including additional awards from Chery. While continued price pressure, integration efforts, and launch costs temporarily affected profitability, the strategic rationale remains fully intact. We have built a strong platform for future growth, synergies, and deepened customer relationships in what has become the world's most important automotive market. Building on our deep technology know-how and process expertise, we continue to expand our portfolio of innovative solutions for battery electric vehicles, addressing OEM requirements for safety, lightweight construction and performance. This expertise enables us to develop highly engineered solutions that combine material innovation and advanced manufacturing processes. A strong example is our spray transfer molding technology, or STM. During the first half of the year, a European car manufacturer selected an Autoneum STM-based underbody shield for a new vehicle platform. This award validates STM as a next-generation lightweight composite solution for structural underbody applications and demonstrates its ability to replace conventional materials while meeting demanding performance requirements. We are also seeing growing customer interest in our impact protection plate, which protects battery systems against impact, fire and corrosion. In the first half of 2026, we secured the first series production award for this technology from a major Japanese vehicle manufacturer in China. This nomination represents an important milestone and further confirms the attractiveness of our shielding technologies. Together, these wins illustrate a broader trend. Customers are increasingly seeking integrated solutions that combine safety, lightweight design and performance. With our expanding product portfolio of shielding technologies, Autoneum is well positioned to benefit from this growing demand and to further strengthen its role as a technology partner for the next generation of mobility. The second innovation example around electric mobility is our next generation battery lid technology, which we unveiled last month at the Battery Show Europe 2026 in Stuttgart. With this prototype, we further expanded our portfolio for electric mobility. The innovative composite design combines safety, lightweight construction and functional integration in a single component. It addresses OEM's growing demand for efficient and scalable battery housing solutions for future BEV and HEV platforms. From a technology perspective, the battery lid enhances thermal and acoustic performance while improving the overall system efficiency of the powertrain. These innovations demonstrate how Autoneum combines its core expertise in acoustic and thermal management with the requirements of next-generation electric vehicles. And the numbers speak for themselves. In the past 12 months, we have advanced 10 innovation projects to important development milestones and filed 12 patent family applications, of which 7 of them were in China. And last but not least, I would like to mention a recent milestone that makes us particularly proud. Our FlexiLight PET technology has been nominated for a 2026 PACE Pilot Award, widely regarded as one of the automotive industry's highest honors for innovation. The nomination recognizes a product that perfectly reflects Autoneum's approach to innovation, combining outstanding performance, lightweight design and sustainability in a single solution. Made entirely from polyester with a high share of recycled content, FlexiLight PET delivers excellent acoustic performance while supporting circularity and end-of-life recyclability. We see this nomination as a strong validation of our innovation capabilities and are very much looking forward to the award ceremony on November 17. Naturally, we hope to bring the trophy home to Autoneum. Our improved profitability in the first half of 2026 was supported by strong regional execution. In Europe, we continue to benefit from a strong market position, operational excellence, and a loyal customer base. The region remains a key contributor to the group's profitability and demonstrates the benefits of our focus on efficiency and execution. In North America, we maintained our disciplined approach to commercial and operational management. We continue to optimize our manufacturing footprint, including the consolidation of operations in Canada through the closure of our London plant. At the same time, we navigated the evolving tariff environment effectively. Thanks to our local-for-local production strategy, our direct exposure remains limited, enabling the region to continue demonstrating resilience and a strong focus on value creation. In Asia, we continue to execute our growth strategy with a strong focus on integrating recent acquisitions, consolidating our footprint and realizing additional synergies. At the same time, we further strengthened our position with Chinese OEMs and expanded our manufacturing footprint to support future growth. In SAMEA, we once again demonstrated the strength of our market position and our customer relationships. Despite operating in a highly inflationary environment, we continue to manage cost pressures proactively and effectively. The region is also benefiting from a number of program launches secured in recent years, particularly in Turkey and South Africa, which are now ramping up production. As our most profitable region, SAMEA remains an important contributor to the group's performance, and we see significant opportunities to further expand our presence and grow the business. Across all regions, our focus remains unchanged. Disciplined execution, operational excellence, customer proximity, and the ability to adapt quickly to changing market conditions. These capabilities continue to support profitable growth and strengthen Autoneum's competitive position worldwide. Our sustainability efforts continue to gain external recognition. With a gold rating from EcoVadis and further progress in the CDP assessment, we are seeing tangible validation of the actions we are taking across our operations. In the first half of 2026, we continue to implement measures that improve resource efficiency and generate tangible savings. In Scope 1, targeted efficiency measures resulted in annual fossil fuel savings of more than 11,000 megawatt-hours. In Scope 2, operational excellence and technology upgrades generated around 8,000 megawatt-hours of annual electricity savings. We reduced hazardous waste by more than 3,000 tons through material efficiency and waste reduction activities. Dedicated water reuse and leak detection projects are generating annual water savings of around 2,000 cubic meters across our operations. At the same time, we are advancing our decarbonization roadmap. Autoneum remains committed to increasing the share of renewable energy across its global operations to 25% by 2027. As part of this roadmap, for instance, our Volducci plants in Czechia recently launched a solar panel project with production scheduled to start in 2027. These initiatives demonstrate that sustainability and operational excellence go hand in hand. They reduce environmental impact, improve efficiency, and support our long-term competitiveness. Let me also highlight an achievement that is important for the long-term success of Autoneum. Our Swiss headquarters has once again been certified as a top employer in Switzerland in 2026. This renewed certification reflects the continued development of our people policies and our focus on creating a high-performance and inclusive work environment. It confirms our progress in areas such as employee engagement, leadership development, and organizational effectiveness. For Autoneum, a people-centric culture is not separate from business performance. It is an important enabler of execution, innovation, and long-term success. By strengthening employee engagement and employer attractiveness, we also strengthen the foundations for sustainable performance across the group. And with that, I will now hand over to Bernhard, who will take you through the financial results in more detail.
Thank you, Elko. And good morning, everyone. I'm pleased to walk you through Autoneum's financial performance for the first half of 2026. Starting with the key figures for the first half of the year, Reported revenue was broadly stable with 1.15 billion Swiss franc compared with 1.17 billion in the prior year period. This slight decline of 17 million was due to negative currency translation effects, mainly reflecting the continued appreciation of the Swiss franc. In local currencies, revenue increased both organically 0.1% and inorganically 2.9%, supported by the contribution from our 2 acquisitions in China and resilient underlying demand in Europe. EBIT increased to 69.8 million Swiss francs compared with 61.9 in the prior year period. The EBIT margin rose from 5.3 to 6%, which is at the upper end of the full year guidance we issued in March. The net result increased by 5.6 million to 46.3 million Swiss francs. Basic earnings per share rose to 5.42 Swiss francs compared with 5.16 Swiss francs in the first half of 2025. Free cash flow amounted to 59 million compared with 48 million excluding M&A effects in the prior year period. The key message is that Autoneum delivered on profitability and strong cash generation despite a subdued automotive market. This performance was supported by execution level within our control, operational improvement, effective cost management and working capital discipline, rather than by market tailwinds. Let me now turn on our revenue development. Organically, revenue increased by 0.1% in the first half, outperforming the global automotive market, which declined by 1%. In local currencies, revenue increased by 35 million or 3%. Organic growth contributed 0.8 million, while inorganic growth accounted for 34.3 million, stemming from last year's acquisition of Jiangsu Huanyu Group and Chengdu Ichi Sichuan Group in China. This positive development was more than offset by 51.6 million of negative currency translation effects. As a result, reported revenue in Swiss franc declined slightly by 16.6 million year-on-year. In Business Group Europe, revenue in local currencies increased by 2.1%, with a positive impact from volumes and sales price changes. This was better result than the overall market, which increased only slightly by 0.3%. Revenue in Swiss franc for the region rose to 562 million in the first half from 560 million in the year earlier period. In Business Group North America, revenue in local currencies declined by 3.5%, negatively impacted by lower volumes and transactional FX, among other effects. Volume were in line with the overall North American market, which fell by 0.7% in the first half due to softer demand and higher trade-related uncertainty. In Swiss franc, Business Group North America's revenue fell to 377 million in the first half from 421 million in the prior year period, additionally reflecting adverse currency translation effects. Turning to Business Group Asia, revenue in local currencies increased by 14%, driven by the acquisition in China. In contrast, the overall market fell by 0.8% due to weak domestic vehicle demand for light vehicles produced both Chinese and Western OEMs. Consolidated revenue in Swiss franc rose to 156 million in the first half from 143 million a year earlier. In Business Group SAMEA, revenue in local currencies increased by 32.5%, driven by the inflation-related price adjustments and higher volumes. In contrast, the overall market in the Business Group SAMEA fell by 6.1% in the first half due to inflation and economic uncertainty in the Middle East. Business Group SAMEA's consolidated revenue in Swiss francs rose to 68 million in the first half from 55 million a year earlier. Moving on to the operating result. This bridge illustrates the improvement in Autoneum's earnings. 3 out of 4 regions contributed to the group EBIT increase. Asia was the main offset, reflecting recent integration costs and ongoing price pressure in a highly competitive market. Group EBIT increased by nearly 8 million Swiss francs to 70 million in the first half, and the EBIT margin improved to 6%. The margin improvement was driven by 3 main factors: better operational performance, disciplined price and cost management, and structural measures to align capacity with demand. These positive effects more than offset volume pressures, currency headwinds, and temporary integration costs in Asia. In Business Group Europe, EBIT increased to 33 million Swiss francs from 24 million a year earlier, with the EBIT margin improving to 5.9% from 4.3%. The improvement reflects the cumulative effect of structural measures already implemented following the consolidation of our footprint in Czech Republic, France, Germany, and UK, and tighter cost alignment. These measures are part of our broader effort to adapt capacity and cost structures to both current and expected demand levels. In Business Group North America, EBIT rose to 24 million Swiss franc in the first half from 21.5 a year earlier. The EBIT margin increased to 6.5% from 5.1% as operational improvements and disciplined price management enabled us to offset lower volumes due to adverse market conditions. In Business Group Asia, EBIT fell to 7.9 million Swiss francs in the first half compared with 11 million a year earlier, while the EBIT margin declined to 5.1%, coming from 7.7%. Profitability was impacted by integration costs from the recent acquisitions, ongoing price pressure in the market, and launch costs for the 2 new plants in Wuhu and Anqing in China. Turning to Business Group SAMEA, profitability remained strong in the first half. EBIT increased to 9.8 million Swiss franc from 8 million in the prior year period, with the EBIT margin remaining at a high 14.4%. This result reflects a strong operational performance and a successful price management in a region that continues to be affected by high inflation and market volatility. Finally, EBIT fell by 2.9 million Swiss francs for corporate and eliminations, as we invested into our IT infrastructure by moving to S/4HANA, amongst other expenses. Overall, execution quality in Europe, North America, and SAMEA drove the improvements in profitability. Asia represents the main medium-term improvement lever. All 4 business groups delivered EBIT margin of more than 5% in the first half, confirming the progress we have made in strengthening our profitability in the recent years. Turning to the lower section of the income statement. The financial result amounted to minus 7.1 million Swiss francs in the first half compared to minus 7 million in the prior year period. A higher net foreign exchange loss of 1.6 million was mainly driven by less favorable valuation of lease liabilities in foreign currency. Interest expenses came in at 2.2 million Swiss francs, lower than last year due to the decline in debt combined with the lower interest rates driven by the lower SARON and margin. Income taxes increased by 2.3 million Swiss franc, while the effective income tax rate was with 26.2%, which is broadly comparable with the prior year period. Consequently, the net result increased by 13.7% to 46 million Swiss francs. The portion attributable to Autoneum shareholders increased to 31 million, and the basic earnings per share rose by 5 to 5.42 Swiss francs. The main takeaways from the income statement is that the operational improvements were translating into sustainable earnings growth. Let's now focus on our cash flow. Cash flow from operating activities increased to 85 million Swiss francs, supported by the improved net result and a favorable working capital development compared to the prior year period. Cash used in investing activities fell to 27 million Swiss francs in the first half because of the prior year period included a net cash outflow for the acquisition of Huanyu. At the same time, capital expenditure was higher year on year, mainly due to the investments related into recovery at our Arua plant in Spain, following a wildfire last August that led to extensive property damage. Free cash flow increased to 59 million from 16 million Swiss francs in the prior year period, which included M&A related net cash outflow in the amount of 32 million. Excluding M&A effects, free cash flow rose by more than 21%. The underlying free cash flow development demonstrates that the stronger earnings are not just a P&L improvement. We have again converted this into cash. I will conclude the financial review with the balance sheet. Total assets increased by 43 million Swiss francs to 1.81 million at the end of June, mainly due to FX translation effects of 28.5 million. As usual, net working capital was seasonably higher in the half year one compared with the year-end 25, increasing by nearly 14 million Swiss francs. Net debt declined by 23 million Swiss francs to 390 million, supported by our strong cash flow generation. Shareholders' equity increased to 656 million Swiss francs, while the equity ratio edged up to 36.3%. This improvement was achieved in addition to the 32 million Swiss franc in dividend payments to Autoneum and minority shareholders. This stronger financial position gives us the flexibility to continue investing into our business while maintaining a disciplined capital allocation. Our priorities remain clear: improving operational performance across our global footprint, advancing innovation in acoustic, thermal and shielding technologies, and generating synergies from our acquired business in the strategically important Chinese market. With that, I will hand back to Elko, who will take you through the market outlook and the guidance.
Thank you, Bernard. So the financial results you have just presented provide a strong foundation for the next phase of our strategic journey. We improved our profitability, strengthened cash generation, and further enhanced our financial resilience. I will now turn to the market outlook and our guidance for 2026. Looking at the market environment, global light vehicle production is expected to remain under pressure in 2026. According to the latest July 2026 forecast from Mobility Global, global vehicle production is expected to reach approximately 91 million units, representing a decline of just above 2% compared to 2025. The first half of the year remains soft, with production of 44.8 million vehicles. Looking ahead, production is expected to improve to more than 46 million vehicles in the second half, an increase of 3.6% compared to the first 6 months of 2026. However, this does not mean that the market environment will become easy. The oil price remains an unpredictable external factor. Regional developments will be uneven. Europe and North America are expected to remain broadly stable, while China and other regions continue to face a more challenging environment. For Autoneum, this means that we will continue to focus on what we can control: disciplined cost management, operational excellence, pricing discipline, and the realization of synergies from our expanded footprint in China. Based on our strong first half performance and the expected market development for the remainder of the year, we are improving our guidance for 2026. We reaffirm our full-year revenue guidance of 2.2 to 2.4 billion Swiss francs. We are increasing our EBIT margin guidance to a range of 5.7 to 6.2%, and we are increasing our free cash flow guidance to more than 110 million Swiss francs. This improved guidance reflects the progress we have made through disciplined execution, operational excellence, and stronger profitability across the whole group. In the first half of 2026, we increased our EBIT margin to 6%, compared with 5.3% in the prior year period, while maintaining strong cash generation. At the same time, we remain mindful of market uncertainty, regional volatility, and continued price pressure, particularly in relation to the oil price, raw materials, and the competitive environment in China. We will therefore continue to manage the business with discipline and agility. This brings me to the end of our presentation. To summarize, Autoneum delivered a strong first half of 2026. We outperformed global market development organically, increased our EBIT margin to 6%, generated a free cash flow of more than 58 million Swiss francs, and further reduced net debt. We made further progress in China, advanced our innovation portfolio for electric mobility, implemented tangible sustainability measures, and strengthened our position as an attractive employer. Looking ahead, we remain cautious and focused on our execution. With our improved guidance, we confirm our confidence in Autoneum's ability to deliver resilient performance in a demanding environment. Thank you for your attention.